Stocks continue to wobble around midst of global cues. Financials manage some gains while consumer durables and autos drag.
Nykaa gains despite sale of shares by IPO investors as strong demand ensures only a small discount to the market price, but SoftBank's woes cast a fresh shadow of uncertainty on several digital names.
NMDC gains as Kotak Institutional Equities upgrades the stock to a buy with a target price of 130 rupees per share. The brokerage sees a strong re-rating case for the miner post the steel plant demerger and sees upside over the next 6 to 12 months.
Emphasis slips as the management hints in an interview to CNBC-TV18 that 5 to 10% of its portfolio could be stressed even as the company bets big on M&As to boost growth.
In what is being read as good news for the state-owned banks, the government has amended the Nationalized Bank Scheme of 1970 to allow directors to have a tenure of up to 10 years, renewable every 5 years. Changes for SBI to which these rules don't apply will be notified separately.
Hello and welcome to Midcap Radar on CNBC TV18. I'm Ekta Batra and with me is Reema Tendulkar. Well, it's turning out to be a day where we are seeing softness in the markets, but overall you'd have to say it's range-bound with a negative bias at this point in time. So we have the Bank Nifty, which is down around 0.3%. We have the Midcap Index, which is sulking as well. So down around 0.5% for the Midcap Index, and the Nifty down around 80 odd points. A lot of the financials seem to be holding their head above the water in terms of specific stocks. So Kotak Mahindra Bank, for example, is your top gain on the Nifty this afternoon. And something like a State Bank of India is also managing to buck the trend. So that stock too up around 0.4%. Hi, Reema.
Hi, it's actually the PSU banking stocks, right? The Nifty PSU banking index is up more than 1%, and it's not just State Bank of India, right? Pull up something like a Bank of Baroda, or outside of that, an IOB, a Bank of Maharashtra. Across the board, many of these mid-cap PSU banks are having a very good session. There was a note which came out from Bank of America, earlier today, where they're saying that this whole PSB turnaround is now recognized by the market, and it has more legs to go, and it extends beyond State Bank of India. Up until now, whenever we thought of PSU banks and investment, it was always State Bank of India. But now, Bank of America is making the case that even other PSU banks will see an improvement in the return ratios, and perhaps the valuation discount that they've had versus a State Bank of India could narrow going ahead. But we'll discuss all that and more. Let's get to our Midcap Movers segment. Vivek is joining in to take us through the midcaps that are moving around in trade. Vivek.
Well, good afternoon. Quite a few stocks on the radar. A lot of stocks are seeing quite a bit of activity in today's trading session. Especially first on the list is TCPL Packaging. Now, this particular stock, after a good set of results and strong commentary as far as the meet was concerned with analysts, this particular stock is seeing a very sharp up move and hitting a fresh 52-week high. Also, Lumax Industries, this particular stock, after a while today has seen a very sharp up move on strong volumes, perched at the 52-week high. GE Shipping, after a period of volatility today, has once again moved upwards and has hit a fresh 52-week high. Coming to some of the stocks that have hit the volume parameters, IFB Industries, this consumer durables firm, today perched at the upper circuit. And after a very long period of underperformance, PB Fintech today, after two brokerage upgrades from CLSA as well as a positive note from Morgan Stanley today, has moved higher. And Nazara Tech, after 4 days of continuous selling pressure, this particular stock today has moved up on very high volumes. As you alluded a little bit earlier, some of the smaller mid-cap banks today have seen very strong up moves on the back of the news flow. And so Bank of Maharashtra, IOB, Central Bank of India, and UCO Bank, all of these stocks today are moving higher in the session. On the other hand, some of the other stocks that are seeing quite a bit of selling pressure, Bandhan Bank at a fresh 52-week low, Relaxo Footwear after the weak results today has hit a 52-week low, and Piramal Enterprises continues its underperformance today at a 52-week low.
Okay, all right, Vivek, thanks very much for that. So that's the entire buzzing list of broader market stocks. But let's get in some technicals then. Hemeen Kapadia of KR Choksi Securities joins in for a technical check on the markets. Hemeen, hi, welcome to the show. Well, overall, it's turning out to be a bit of a sluggish day, but a couple of the PSU banking stocks are doing well in today's trading session. Select pharmaceuticals are also seeing traction. So anything that you'd recommend on the upside, as well as what you'd probably roll over into next week as well?
A very good afternoon, Ekta. Thank you for having me. Markets seem to be a bit heavy. We probably sort of walking into small correction consolidation. Individually, a lot of stocks to look at. Firstly, a buy call on Balkrishna Industries. The stock is oversold. We saw a huge volume spike a few trading sessions back, and those levels have held. Logic is that smart hands have bought, and those levels have sustained. So bounce is around the corner. So one can buy Balkrishna Industries at 1970, stop loss of 1945, target of 2020. Secondly is a buy call on Kotak Bank. I mean, it's been almost 8-10 months of underperformance. It's from the rounding bottom on the weekly chart. Is on the verge of breaking out. I'm saying verge because trading is not yet over. It's a weekly pattern. So it's on the cusp of breaking out. Looks very interesting. So one can buy Kotak Bank at 1955 with a stop loss of 1925, target of 2115. It's a very modest target actually. Lastly, a sell call on ITC. ITC has had a phenomenal run. Seems tired, overbought. There is some crossover sells by the mechanical indicators combined with some negative divergence. So a sell on ITC on a small bounce at 345, stop loss 352, target of 331.
Hey, man, thank you very much for that. One of your buy calls is Kotak Mahindra Bank, and that is the top Nifty gainer for this week with a rally of 3.1%. It's outperformed its peers like an ICICI Bank, which this week has gained close to about 0.7%. HDFC Bank has practically been flat this week. So Kotak Mahindra Bank has shown considerable strength this week. Getting into a break. Up next, we'll be joined by Hareen Kanani, the MD at Neogen Chemicals, to talk about the Q2 numbers and the way forward. Welcome back. Neogen Chemicals is in focus. The company's delivered an over 30% growth in revenues in Q2 on a year-on-year basis, even as the operating margins and profits took a bit of a hit. But it does expect that orders from Europe to start scaling up in November onwards, and things will accelerate perhaps January onwards. Hareen Kanani, the Managing Director at Neogen Chemicals, is now with us on the show. Mr. Kanani, afternoon, and thanks so much for joining in. Your margins in the current quarter as well as in the prior quarter were about 16.5%. How do you expect the margins to trend? Because these margins appear a tad bit subdued.
Hi, so thanks for inviting and thanks for the question. We've shared in our conference calls earlier that, as you are aware, like 25% of Neogen's business comes from lithium chemicals, and the lithium prices have reached 5 times high as compared to what used to be about a year ago. So I think the margins is just in a percentage point of view, the margins are lower, but the absolute margins, whatever we had predicted for the current year, we are on track to achieve. So the target this year was to do a 600 crores of top line and about 110 crores of EBITDA. So we are already on track of that. We already done 50% of that. And second half is always higher for us. So that's why, for the year, whatever was our targets, we are still reaching that. It's just till the lithium prices remain elevated, maybe 1 or 2% as a percentage will be down, but the absolute margins will still be protected.
Okay.
And the other thing factoring here is that our Dahej site is going full utilization levels. So right now it's somewhere midway.
Okay, I think we've lost the line with Mr.
So help
Kanani.
us improve our margins.
Okay, that point is understood, that lithium, the costs of lithium really are not in your control at this point. But I just wanted to get a sense in terms of the demand trends and whether or not this volatility in input costs or elevated input costs is actually impacting demand for you in any form or manner, because your revenue growth has been quite strong. It's up around 30-odd%. So just give us a sense in terms of the demand dynamics and how that's playing out and whether input costs are impacting it.
Yeah, so the demand, let's say in the bromine derivatives remains strong, which is where we are serving pharma and agro markets. More and more customers who are relying on China wanted to shift to India. So that trend continues. With our new Dahej facility, which is state-of-the-art kind of a facility, even more larger, industry leaders are shown interest to work with Neogen. So this will ensure our continued growth in the future. In pharma, there is a little bit of an inventory correction happening, and we see slight reduction in our demand from our regular molecules, but our new molecules and our new customers tend to do well. And that's why overall for this year as well as next year, we have maintained our target. In fact, we will overshot it by whatever is a higher lithium price impact. But on our regular lithium price basis, we are already meeting our targets and doing slightly better. when we talk of the impact of the lithium prices, what we have seen is some of the Indian applications at this high level of lithium price are not able to sustain the demand, and the demand is a little bit lower. But what is helping us that worldwide there is a shortage, and Neogen is one of the company who is able to source lithium efficiently. So because of that, international new customers for new applications are coming to us. Also, we remain on track to continue working on our lithium battery materials for the EV and the energy storage segment. So that investment is also continuing. So in a short term, the new demand from new customers in international will make sure that our volumes don't go down. We will keep meeting our targets and maybe even do better once the demand comes back in India. And going forward, the work which we are doing on lithium battery materials for the electrolytes and the electrolyte salts is something which will also keep driving us forward.
How much does pharma contribute to your overall revenues? Because I think that's a space where you said certain molecules face some issues. You are sitting on inventory. And when can it recover?
So I think it's about 50 to 60% of our revenue comes from pharma.
Okay.
And it's we make more than 150 molecules, but let's say from our top 10 molecules in pharma, there are one or two which are seeing slightly lower demand. So while, these were our regular molecules, so we already made the product. We didn't want to have a low utilization in the plants. So we are sitting on inventory, but this will get sold off by, in the second half. And we have already shifted those plants to make other new molecules, which we are developing. So that's why overall we are in a normal position, and we expect to continue to achieve whatever we have already planned for this year as well as for next year. And we continue our growth plans for increase in organic capacity as well as inorganic capacity in lithium, as well as the trial facility which we are planning for electrolyte salts and electrolytes. So all those remain on track. So there's no pause. The only thing which we are still working on is a larger electrolyte facility on which we are still deciding the capacity based on customer inputs. And we are hoping that by, let's say, March end, we would have a capacity and a scale of that business in mind in next 6 months.
Just getting back to that point about pharma, you're saying one or two molecules out of your top 10 molecules in the pharma business are a bit under pressure, but you are shifting production of these molecules, which means you're going slow. So is this a long-term issue with these molecules?
No, so we have
a multi-product. Your inventory correct?
So we have a multi-product kind of a facility. So in the same facility, we are basically, we can make other molecules as well. So normally this capacity was blocked for these molecules, but we always have a very healthy pipeline. So we are using this for the next 6 months. My sense is historically, whenever such an inventory correction happens, the demand is overall a bit subdued, for maybe couple of 1 year, 1.5 year maximum. And again, when it's subdued means it's not zero. I mean, it's just a little bit lesser. So that's the only part. So we know eventually these molecules will come up, and also we can keep making other molecules in the facility till that comes. And whenever the requirement is back, we will be there. In fact, we are also expecting, so we are one of the recipients of the PLI benefit in pharma, and the benefit will start kicking in from this year because we are making intermediates for pharma. So even that will support us when we have to compete more competitively against, Chinese competition going forward. So we can even be more aggressive for this pharma molecule.
I just on that point, since we are talking about the PLI and all of that, I wanted your thoughts on whether China plus one is actually a real opportunity and whether Europe plus one is an opportunity for the company as well. If you could just give your brief thoughts.
Yeah, so I think, one of the areas of work is bromine-based chemistry, and bromine, not only customers desire to shift out of China, but economically also the price of bromine is highest, which is our raw material. So it's highest in China and it's relatively lower in India. So that also gives us an additional advantage. And the shift from China to India has been happening for last 5 years, which has already helped us increase our revenue. We still keep seeing that with the rolling lockdown still continuing in China, many European customers are worried and they are now getting more and more determined to try to find a source in India. So this is on the pharma side. And on Europe, I think, people are watching. I mean, my sense is that in Europe, people still feel this is a temporary phenomena for 6 months, 1 year, which they have to go through. But yes, I mean, they are thinking that, okay, if they can think of India as an option. So I don't think in Europe, people are thinking more structurally that, okay, we are going to be in this high energy prices forever. So it's more like a short term that, okay, they are planning to shift over to India. Of course, Neogen has a good export in Europe that continues. And some of our European competitors closed down about 2 years ago because of competition pressure from both India and China. So that has also helped us because our Dahej site capacity came online just around that time. So many of these customers who were buying from Europe were shifting to India. But again, this is much before what we call as Europe Plus One happened. I mean, this is something which is helping us for last 1 year.
Wonderful. Well, we wish you luck, and hopefully it's going to continue showing in your numbers as well. Thanks, Mr. Kanani, for joining in and talking to us. So that's Neogen Chemicals. Well, we need to take a short break, but on the other side, more stocks in focus.
Welcome back. Strides Pharma gains in trade after its arm gets a US FDA approval for a potassium chloride oral solution. Ekta, first in simple terms.
Well, it's, a drug which is used to improve the potassium levels in your body.
Okay.
But so they've received approval for this particular oral solution from the US drug regulator. Now, it's important because the company has said they have a pipeline of other potassium chloride products which are expected to be approved and launched by FY24. And the entire cumulative market opportunity is expected to be around $330 million. The products will be manufactured at the company's facility in Bengaluru and will be marketed by Strides Pharma in the US market. Just want to point out in terms of US sales, where does Strides stand? It is interesting because last quarter was actually a very good quarter for Strides when it came to the US business. It's around 50% of their total sales. They did sales of $60 million versus $46 million Q-on-Q and versus $34 million on a year-on-year basis. So it was a very good quarter in terms of the US sales, and they're sticking to their guidance of $250 million in terms of total US sales in FY23. And it seems as though now the market understands that the US business is probably picking up pace for Strides.
Okay, and you need potassium chloride in your body because it will help you regulate your heart rate as well as your heartbeat. So it's a very important ingredient. If you don't find it in your natural consumption, natural food, then perhaps you need all these supplements and oral solutions. By the way, the Nifty is taking a turn for the worse right now. So we're closer now to that 18,200 mark. A little bit of a downtick coming through just in the last 10 minutes or so. Pull up that intraday chart and you would see the markets have slipped. Adani Group stocks, Adani Enterprises, Adani Ports have lost ground. Tata Motors, there have been a barrage of negative news this week. The Tata Motors CEO had resigned, and now there are worries about the EV SOPs which are given to JLR in UK that perhaps may come under pressure. So Tata Motors too is slightly subdued in trade. The Nifty Bank too is down nearly 0.5%. With that, we're out of time on Midcap Radar. Your stocks when we return.